Now we cross to Cheryl to hear how the global corn deficit is driving up Australian wheat and barley prices.
Thanks, Claudine. Corn is not only the world's largest grain crop, but it is also the world's second most widely traded. In Australia, corn is just a minor crop, but the consequences of what happens in the world's corn markets are anything but minor for Australian grain farmers. This year, the significance of the global corn market is playing out favourably, with some critical market movements in recent months. Global corn prices have doubled over the past 12 months, and in April and May moved into trading ranges not seen for 7.5 years. Why is this? Well, this is because 2020-21 has been the fourth consecutive year of corn consumption exceeding corn production. And this has taken global corn stocks to their lowest level since 2015-16. The deficit for this year is due to some marked changes in imports and export availability from some of the world's largest corn market participants. In particular, in the past 12 months, we've seen a 240% year-on-year increase in China's imports of corn. We've seen diminishing stocks in the US, the world's largest corn-producing nation. Brazil, the world's second largest exporter, has also had a severe drought, reducing its production and export availability. And there has also been reduced export availability from Europe and the Black Sea region. With stocks so low, nervousness in April and May about the state of the 21-22 US crop moved prices to 7.5-year highs. Prices have now eased somewhat following some rainfall in the US that has taken the edge off, though not completely removed, production concerns. But what's important about these global corn price dynamics is that wheat prices have been swept along too, to be up 20% year on year. And that's because corn, that accounts for 70% of the grain used in feeding livestock globally, has become so expensive that alternative feed grains are being sought out. And this is translating into increased demand and higher prices for wheat. And these higher prices for wheat are set to stay around 20% above the 5-year average over the coming year, due to the underlying tight corn stock situation I've just outlined and only limited forecast gains in wheat stocks. This is welcome news for grain farmers who have just planted or are planting this year's Australian wheat crop, especially when the current outlook for Australian wheat production is good. Our current estimate is for close to 29 million tonnes of wheat to be produced this coming year, which is 20% above the 5-year average and comes on the back of last year's record 33.4 million tonne crop. Each time we see Australian wheat production this good, prices inevitably drop, as we saw in 2011-12 and 2016-17. This was due to both good local supply and good global supply. Last year, Australian wheat prices dropped from drought highs, but didn't bottom out because of the post-drought stock rebuilding. But it was also because we had higher underlying prices than we'd had in 2016-17. But what can we expect for the year ahead, with a second consecutive year of good production predicted? The 2022-23 season will see a global supply response to the high prices we're seeing. But between now and then, we're expecting Australian grain farmers to see good production and good prices.
Thanks, Cheryl.
Thanks, Claudine.